Hey guys, welcome back to the channel. Today's Saturday, so that means it's time for the top 20 high yield ETFs of the week, according to the MaxFactor. Now, you might have watched my show before called the Daily Factor that I have on every night about 9 or 10 o'clock. Well, the Daily Factor, it uses the MaxFactor, but I look at a certain subset of the 220 high yield ETFs that I follow on the MaxFactor and evaluate them. Well, on Saturdays, we look at all 220. We pick out the best 20 as far as risk-adjusted reward goes, according to the MaxFactor. All right, guys. And also, I'd like to say this is, remember, this is a trading index. This index has a huge element of momentum in it. You might see funds on the MaxFactor that maybe haven't done well over the past year, but over the past, half year, quarter, they're on fire. So they have momentum. But I'll give you, there's an example of that in the countdown tonight. So we'll talk about it. All right, so let's start this show off. Here we go. Number 20 on the MaxFactor is IWMI from NEOS. This is based on the IWM. They sell options on the IWM, which is the IWM is an ETF that's the Russell 2000. This thing's been positive on NAV this quarter and has a 13% yield. So that's not bad. And in addition to that, it has a 1-year total return of 16.42%. And the 1-year total return doesn't even figure into the MaxFactor, but it's good in that area as well. It doesn't figure into the short-term MaxFactor. The 1-year total return is included in the Quandex, which is the longer-term MaxFactor. We'll talk about that at the end of this also. Number 19 is SPIN. Now, this is from State Street. This is based on the S&P income. Let's see actually what SPIN stands for. It's the spider or the State Street. State Street owns the spiders. That's their product, the SPY or the spiders. Anyway, the State Street U.S. Equity Premium Income ETF. Well, you can see good NAV, a decent yield at 8.09%. Not exactly a high yield, but it is a respectable yield. Number 18 is HDLB. Wow, okay. So this one's an interesting one, and this one I believe is a first-time entrant to the top 20 list. It may have been last week, but it is a new one. Now, this is the eTrax monthly pay, double leveraged U.S. high dividend, low volatility ETN. So this is a fund that trades leveraged options on an index of stocks that have high dividends and low volatility, and that's a nice way of saying value stocks. This is a value play, and you'll see that value plays are showing up more and more frequently in the top 20 list lately. All right, number 17 is IAUI. Okay, this is our first precious metals based fund. This is based on the on gold, and it's an income fund. It yields about 10.45%, and it has a great quarterly NAV return of 14%. Now, this is from NEOS. As is IWMI. Lots of times the NEOS funds end in an I, but not all the times. Anyway, this IAUI is the first of what I suspect will be many gold and silver funds that will appear on the top 20 tonight. IAUI is the first of them, though. Gold and silver, as you guys might know, has been really hot lately. Even after the 10% pullback, it's still hot somehow. All right, well, we have XLII coming into number 16. Now, this is our second one from State Street. This is the State Street Select Industrial. So this is where they sell options on the State Street Index that's based on industrials. As you guys know, the Dow Jones Industrial has been on fire lately and has actually lately been outperforming SPY and the Qs. Well, that's the Dow Jones Industrial generally has more of a value type stocks in them. So it really doesn't surprise me. Industrials are kind of the opposite of momentum stocks. They're like, this is like Caterpillar. This is like, I'm trying to think of stocks that are in this. category, but these are heavy industry type things. Big that Dow Corning, you know, that kind of stuff. Okay, here we go. Number 15. All right, XLBI. Okay, this is another one from State Street. Now, XLBI is materials, and this has been hot also. So this would be like rare earth stuff. This would be like, it could be lots of things, but I always think of rare earth and lithium and that kind of stuff when I think about these materials. But it could be lots of other things as well. You need materials to build stuff. This thing is doing well lately. And it's paying a 15% yield with a positive 5% NAV return. The industrial-based one from the same company is paying an 11% yield, the 4% NAV return. Either one of those has been working out very well lately. All right, number 14 is WEEI. Now, this is our first one based on the energy business. WEEI is from a company called Westwood. They're out of Dallas. Westwood Salient Enhanced Energy Income ETF. And this is just along with natural resources, materials, this goes kind of in the same theme. And sure enough, this thing has been looking really good lately. Lots of green on this screen. Number 13 is RIV. All right, RIV is something, it's a closed-end fund. It's called the River North Opportunities Fund. Let's take a look at it really quick. I'm not exactly sure who the company is that runs it. Let's just look really quick. We'll both learn together. It's called River North. Okay. All right. Well, interesting. These guys, their investment objective or philosophy is, it's a total return fund. They're going for total return and capital appreciation. And then it says, and current income. The fact that current income comes second, to me means this is more of a growthy type fund, because they probably would have put the income first, and then they would have said, and it also seeks capital appreciation. So these guys, it says their philosophy is they believe the markets are generally efficient, and I would agree with them. They're right about that. Closed-end funds offer a distinct structure where investors can purchase a diversified fund and potentially generate additional return through the change in relationship between the closed-end fund's market price and the net asset value. Investment strategy. The fund employs a tactical asset allocation primarily comprised of closed-end funds, ETFs, special SPACs, special purpose acquisition corporations, companies, and BDCs. So it looks to me like a fund of funds. Anyway, this is definitely an interesting one, and it has definitely been doing well. Last night, I don't know if any of you guys happened to watch it, but I had a show on about 10 or 11 o'clock last night, and it was the Daily Factor show, and we looked at closed-end funds, and RIV was one of the best ones on there. I suspect we might see another closed-end fund or two on this list. We'll see. Number 12 is DOGG. Okay, this is the ultimate value stock play. In investing, you have value stocks, like, say, Philip Morris, Coca-Cola. Generally, those might fit into the value area. And then you have growth stocks like Palantir, NVIDIA. Well, what this one does is this is an investment philosophy. It's based on investment philosophy called the dogs of the Dow. This strategy, what they do is they pick out the Dow Jones has 30 stocks in it. They pick out 10 of them that are the highest paying. So they take the top 33%, the top third highest paying dividends. And oftentimes value stocks pay higher dividends. Generally, growth stocks do not pay dividends because they need to constantly, lots of times growth stocks have a lot of debt. They don't have the money to pay dividends, and a growth stock wants to keep reinvesting in research and development and developing new products, so they keep growing. That's the whole idea. Well, when you get to value stock area, lots of those stocks, like think of an Apple. It used to be a growth stock. Lately, it's turned into a little bit more of a value stock. They've stopped growing so much, and sure enough, the past few years, they've started paying a dividend. It's not a huge one, but they've started paying a dividend. All right, number 11 is GLDI. Okay, this is our This is based on gold. It's based on the GLD. Now let's look at it here. This is not from NEOS, even though it ends in an I. It's not from NEOS. This is actually from UBS. This is, I think, kind of an older gold fund. This goes back to 2013. Now, you know, it hasn't looked great, but 2013 through 2023, let's say, we're in a deflationary environment. Inflation has really kicked up, 2023, 24, 25 lately. And this in gold and these kinds of plays have kind of come back to life a little bit. All right, so that one has a quarterly NAV return of 4% and a 16.5% yield. All right, number 10 is GDXY. Okay, speaking of gold, this is based on the GDX, and the GDX is an index or an ETF investment made up of gold mining stocks. All right, so this is the GDXY. These guys take those stocks and sell options on them to generate a yield. And sure enough, this thing does generate a yield. It pays almost 50%. We can look at our other contestants tonight. 16, 8, 12, 11, 15, 11, 10, 10, and 7, and 13. Not bad, but it's nowhere close to 50. Now, of course, that's why this is ranked a little bit higher. Look, this fund you aren't even sacrificing because this thing's paying 50 and you have better NAV return than some of these things that are paying less. Now, that's what it's all about. It's all about that risk-adjusted. It's all about the after-tax risk-adjusted reward, which is what this metric tries to illustrate. Number 9 is Chippy. All right, Chippy is from YieldMax. Now, this one is not a value fund. This is the first growth fund. I mean, these are microchips. These are definitely fast-growing companies. Anyway, we do still have some growth on the chart. Now, this thing's yielding 35%, and the NAV's up 6%. NAV's up about the same as GDXY, but it doesn't yield as much. So you may say, well, why is it ranked higher? And we'll get into that a little later, but it has to do, remember, I say risk adjusted. GDXY has a lot more risk involved in it. And according to the MaxFactor, the extra yield is not justified by the extra risk, at least not yet. All right, number 8 is XLEI. Okay, so XLEI, this is another energy-based investment. This is another State Street. Boy, State Street's hot. They've had XLEI Energy. They've had XLBI materials, and they've had XLII, which is industrials. Good job, State Street. And this thing is paying 19.39% compared to the other State Street ones. It's, XLBI only pays 15 and XLII only pays 11. It's not the fund's fault. It has to do with the stocks that are in the fund, and these stocks, at least lately, have a higher implied volatility, which means as option sellers, you should maybe expect a higher yield, which is what these guys have. Anyway, great job, XLEI. Quarterly NAV return of 6% positive, so just about like Chippy. Now, it doesn't yield as much, but you could bet it's one heck of a lot safer. It wouldn't be ranked ahead. Well, like I say, we'll get into that a little bit later. We'll look at some other metrics afterwards. Number 7, KSLV. Okay, this is based on silver. It's from Curve. These guys do a good job. I mean, a 15.4% yield. You combine that with a quarterly NAV return of 54%. That's insane. That's more than 10 times number 8's NAV return. Now it may be 5 times as volatile though. So I mean, you can't just always eyeball these, and it'd be easy if we could just pick out the highest number, just choose the one with the highest yield, and that's the one you buy. Well, that's not a great way to do it. That'll usually lead you astray. Usually the high yield ones are the bad ones, but not always. The MaxFactor helps us tell the difference between the two. Number 6, TSMY. Okay, yielding 53%. So it's our highest yielder yet. It even yields more than GDXY. Now, it's based on Taiwan Semiconductor, the stock, TSMY, or TSM is the stock, and These guys sell options on it. They sell synthetic covered call spreads. Whatever they're doing is going well. NAV's up 4.6, yields plus 53. Great job. Who's number 5? Let's check it out. SLJY. Okay, this one is based on silver miners. Not only silver miners, junior silver miners. So I'm thinking maybe kind of like a mom and pop silver mine as opposed to a big corporate silver mine. I'm being somewhat sarcastic, but it's based on smaller silver miners. And they sell options on that index, and whatever they're doing it right because the NAV's up 37%. And they have a 14% yield. Yeah, that is not bad at all. Let's go to number 4. ASGI. Okay, this is our second closed-end fund on the list. Our first one was RIV, the River North Opportunities Fund. This one right here is the Aberdeen Growth and Infrastructure, something like that. Aberdeen Growth and Infrastructure Global. Oh, sorry, Aberdeen Global Infrastructure Income Fund. And this thing just gone parabolic this past month. I mean, it's up $3 in the past, on this 1 month candle. I mean, that's insane. Even on daily, it looks really good as well. You can see these guys took back their March highs by May. A lot of good ETFs that pay a yield, even like SPY or something, it's a decent, great ETF. I don't think recovered until June or July. This one is a good one. Now, doesn't pay a super high yield, only pays 9.5. But, look at all this green on their performance. It's 41% for the year, 14% year to date, 40% for 3 years. I mean, it's just insane. All right, so that's our other closed-end fund. Do you think there'll be any more closed-end funds? We shall see. All right, number 3. Number 3 is Fiat. All right, so Fiat is yielding 22.62% or thereabouts. And on this quarter, the NAV is up 22%. So what is Fiat, you might say? Now, Fiat is is different than any of these other funds. All of these other funds make a bullish bet on the underlying. They either buy stock or use options to synthetically make a bullish bet on the underlying. And then what they'll do is they'll usually sell calls. Doesn't have to be, but they'll usually sell out of the money calls. The out of the money calls will generate an income. If the stock goes up, they can participate to a point, to the call strike, right? Well, these guys have it figured out a little different. This is from our friends over at YieldMax, and they're the only income fund that I know of that's inverse. They are from YieldMax. There's 4 or 5 of them from YieldMax. So in other words, these guys make a bearish bet on the underlying. The underlying for Fiat is Coinbase, so they make a bearish bet on Coinbase. Then they sell out of the money puts for income. So it's just opposite day. Well, anyway, you can see for the past year, this has been a lousy investment. Down 48% total return for the past year. Now remember, the MaxFactor we could just look at the 1-year total return and just choose the highest one. That tells us what happened in the past year. I think you have to look at more than that. When you factor in recent momentum, this thing is the 3rd best risk-adjusted reward of the 220 high-yield ETFs I follow. At least this week it is. And this thing has been hot for a while. All right, well, nice job, Fiat. Nice job, YieldMax. Who's number 2? Number 2 is KGLD. All right, KGLD is a brother fund to KSilv. So KGLD, unlike KSilv, it only yields about 10. Their KSilv is yielding about 50% more. KGLD's NAV also isn't quite as good. It's up 46%, where KSilv's NAV is up 54%. But it's still pretty dang good, especially when you figure with KSilv, especially that KSilv's quarterly NAV return is up 54 cents, and that's despite silver recently going down 10% in 1 day, and they're still up that much. They were up more like double. They were up more than that. But the same thing with KGLD. KGLD was up even more, but gold was down also not quite as bad as silver, but was also down a few weeks ago in a dramatic fashion. All right, so that is number 2. Who do you guys think is number 1? Who's missing? I mean, do you think maybe it's blocks? It could be blocks, maybe. You think it could be, I was going to joke and say it could be Murny, M-R-N-Y, but that's actually not that funny anymore because Murny started doing better. It actually could be Murny. I mean, it could be. But it's not going to be blocks. Blocks has not been doing very well lately. So I was being sarcastic about that. So who do you think? Do you think maybe it's Ulti, ULTY from Yieldmax? Probably not. Who is it? Well, I mean, it's probably either based on gold or building materials, silver, chip stocks, or oil. That's pretty much the theme this week. So let's see what it is. What's it based on? Oh, XOMO. This is from our friends at Yieldmax. Yieldmax has been having a really good week. And the Yieldmax stocks hold up better. The Yieldmax high yield funds hold up better in volatility than some of the other ones do. And we see that by all these ones on the list. Fiat's built for volatility, but XOMO. And then also we have from Yieldmax TSMY, and then we have Chippy, and then we have GDXY from Yieldmax. Yieldmax cleaned up this week. Okay. Well, in any event, XOMO, they sell covered call spreads on ExxonMobil, have almost a 29% yield. Their NAV is up nearly 12% just this quarter, a 1-year total return of 19%. And you may say, well, there's some of these, it hasn't done nearly as well as KGLD. Well, it certainly has on a risk-adjusted reward basis. So let's look at the entire data set here, and I'll put this, I'll save this as a PDF and put this in Patreon so you guys can play with it yourself. And I'm also going to have I'll also have some more content in Patreon, some bonus content. So go check my Patreon after you watch this video. So let's just look at this. So let's just look at some of these metrics. One of my favorite metrics to look at that tells you a heck of a lot is the stable dex. Now, higher is better, just like in real life. Bigger numbers are better. You want more than less. It's just like money, or just like, lots of things. So the highest ranking stable dex is a 1.6, and I index this to the SPY. The SPY equals 1. So 1.6 means this asset has been, at least this quarter, 60% more volatile, moves up and down 60% more and further than with more magnitude than the SPY. What is that asset? It is XLII. This is that industrial-based one from State Street. The River North Opportunities Fund has been super stable as well with the 1.54. DOGG has been super stable. This is the dogs of the Dow strategy. Value stocks are generally more stable than growth stocks. And we have GLDI acting very stable as well. Then on the least stable, kind of the ones that aren't super stable, are KSILV, SLJI, that's just silver miners, Fiat, and this is the inverse Coinbase strategy. GDXY is also not super stable. It's only about a fourth as stable as the market. So that's one thing I like to look at. Now, the Quandex is the longer-term MaxFactor. It was invented by Jonathan Quan, and that's why I called it the Quandex, or he helped me figure this out. But this measures the longer-term risk-adjusted reward. This just steps back and takes a broader picture, but it's looking at the same thing. So the problem with the Quandex is it can't measure ETFs that haven't been around for a year yet. It needs a year's worth of data. So, but of the ones that have been around for a year, ASGI is number 1, GDXY is number 2, this HDLB, and we could see that on the 1-year total return. The 1-year total return of ASGI is 50%, GDXY is 63%, HDLB is 32%, GLDI 30%. Great 1-year total returns. Some of these other ones could probably be on the Quandex if they were around for a year. We just don't know yet. Well, all right, guys, I hope your favorite fund made it. If it didn't make it, maybe it'll make it next week. Be here tonight, my nightly show, the Daily Factor show tonight. We can look more in depth into this list, and also we're going to also look at the subset of ETFs that are based on the SPY. It's S&P Saturday night tonight. But if you have any questions about this, or we want to look, more in depth, you want to say, well, hey, why did you rank IWMI behind this one? We can look at it. We'll deconstruct these metrics, right? All right, guys. Well, thank you so much for being here. I certainly appreciate it. And I will talk to you guys soon. Remember, as always, this is not financial advice. Consult a professional financial planner. Also, if you'd like to donate to the station, you can always do so at paypal.me/maxconvexity. But you could also like and subscribe, and that helps me out also, and leave me a comment, and that helps out. Whatever the case may be, I appreciate you guys spending part of your Saturday afternoon with me. Thank you so much, and you have a happy Valentine's Day.